The SBM Intelligence, an African-focused geopolitical research firm, says 98% of businesses in Nigeria's informal sector pay their taxes. Well, you heard that, right? 98% of businesses in Nigeria's informal sector pay their taxes, but to non-state regulated actors. This informal sector has business activities that operate outside of government regulation and are largely unregistered. Of course, the attendant revenue challenges this poses is underpinned by Nigeria's tax to GDP ratio at 6%, a measure below the World Bank's recommended minimum of 15% for economic growth and poverty reduction. And of course, a major reason for the low tax to GDP ratio is the large size of this informal sector in Nigeria. A shortfall that can be substantially cured by application of appropriate technology. Well, joining me in our usual educative discourse to throw insights into these and related issues is Mr. Yomi Olugbenro, FCA, partner and West African tax leader in Deloitte. We are going to be unveiling more on my guests very shortly. Also in this episode, we are going to be showing you a few social diaries about what is going to be happening to us in the Institute of Chartered Accountants of Nigeria. And I'd like you to please pay good attention to the advert info that will flash through your screen. Take your pen and your paper, check the phone numbers, because with ICAN on Air, we're going to take you far beyond the reach of your wildest of imagination in terms of advertising your goods and services all over the world. Stay put, stay connected. We shall soon be back. You are welcome back. And Mr. Yomi Okegbenru, you are welcome to ICAN on Air.
Thank you so very much, Mr. Patrick. Very great to be here with you this evening.
Thank you, as always. We quickly just delve into a couple of insights that we expect to hear from you. Let's start with a bit of statistics. A recent study found that Nigeria's informal sector accounted for between 47% and 67% of the economy for the period ranged between 1970 and 2018, with an average of 56% of its GDP. Of course, the study, as we saw it, established that the nation lost a whopping 56% of its potential tax revenue, estimated at about 3.5 trillion naira in 2018 to this informality. And of course, this trend is worse today. Mr. Olubenru, given these findings that I've just read out, how can this large segment of the working population, I'm talking about the informal sector now, be brought into the tax net to address the nation's revenue challenge?
Thank you so very much. I agree absolutely with you with those statistics that you reeled out. There is quite a sizable portion of Nigeria's productive force that is still not yet formalized. And the phenomenon is not limited only to Nigeria, it's the world over. I think International Labour Organization said over 50%, of the world population is informal, and similar statistic within the MSMEs. So, which means, like your question rightly said, there's a significant portion of the revenue accruable to the federation that is still tied into this informal sector. Because the whole essence of, the whole description of informal sector means, business areas that are not regulated by the government. And because they are not regulated, sometimes maybe they are not registered. And because of that, government is not able to tax them appropriately. So a lot of money is on the table as far as that sector is concerned. So one of the critical catalyst, for bringing them into the mainstream is what your topic itself says. That is driving this inclusion through technology, because Nigeria is highly populated. The infrastructure constraint in tracking and tracing, every non-compliant taxpayer is huge. But technology can do for you what hundreds or thousands or tens of thousands of people will not be able to do at the same time. So one of the critical way out for us is how to rethink the deployment of technology in such a manner that we can bring in all of the businesses and potential taxpayers that are not within the mainstream yet.
Of course, you just touched on that. Usually, technology, ComStat says at the end of the day, the penetration is not as deep as we expect. Now, but do you think the nation's information and orientation agencies have been effective in their roles in reaching out, educating, and sensitizing this informal sector and this untaxed on the need to pay tax?
Well, judging by where we are, I think it is safe to say there's a lot more that can be done in that area. That's not to deny the fact that there have been some measure of improvement over the last couple of years. I think if you ask anyone generally on the street or anyone within the informal sector, the level of appreciation of what their tax obligations and responsibilities are, it's beginning to change. It's beginning to increase, and you know why that is so. It's because of the focus that we've had over the last couple of years, particularly some of the amendment that has happened to our taxing legislations, and some of the general public awareness that has come on the back of that. But there's a lot that needs to be done in terms of making sure that the message is simple, making sure that the message is couched in languages that can penetrate and reach all of this informal sector. There is nothing wrong in having them in basic Nigerian languages, played out in markets, played out in stores, played out all across the Federation. It's all about making sure that we simplify what usually seems to be taken as a complex system of taxation. We need to find ways of breaking the message down into simple languages, very simple to understand, and also in terms of the rules that they need to follow in complying.
There is no way we'll be on this discourse. We'll not be talking about employment, tax, employment, revenue generation, of course, because the World Bank recently stated that 80.4, a whooping 80.4% of Nigeria's employment are in that informal sector. Given that these employments are unstructured and their earnings uncertain, how can, you mentioned it a bit earlier, how can technology be leveraged to build their earning data, improve tax collection, and boost the nation's revenue as a result?
Right. So what we need to do when it comes to the informal sector is to be a lot more holistic in our approach. And I use the word to be more holistic because it's admitted that certain measure of progress has already been made in that area, but it's not yet holistic. And what I mean is this: the focus when it comes to the talk around informal sector shouldn't just be around taxation. And if you focus only on taxation alone, you realize that it's a chicken and an egg thing, right? So there are a number of provisions that currently exist within our rules that provide some measure of incentives, so to some of the players within this sector. So, for example, the recent amendment of through the Finance Act, which says if your annual revenue is below 25 million naira threshold, you are ideally not supposed to be liable to pay taxes. You are relieved of the obligations to be filing VAT returns, and all of that. So now, this is part of the incentive. Now, but the whole idea is to ensure that government have access and visibility to these businesses, because tax exemption doesn't exclude you from tax registration. All right. So when you realize that filing your tax return doesn't come with accompany with a paycheck, maybe your enthusiasm to come through to the revenue authority is a lot enhanced. Now, but within that particular process, what government needs to do is to then ensure that there is a medium to long-term benefit that the country, the nation, stands to gain as these businesses then become a lot more mature, become a lot more structured, and become a lot more formalized. And so what do we need to do as far as those areas is concerned is to essentially look at what are the hindrances, what are the barriers, why are these businesses not formalized? Sometimes some do it as a deliberate way of evading tax. So they know that when they are not registered, government doesn't know them, and so no taxman is going to be on their trail. But that's just a handful of them. Some is just the bureaucracy and the challenges and the limitations around getting businesses registered and ensuring that it's quite easy for you to pay your taxes. Again, some steps have already been taken as far as some of the initiatives by PEBEC, some of the simplification of the CAC registration process. Now, what we need to do is to move that a niche further and then ensure that what other pillar exists, particularly with respect to their interaction with the tax authorities. How do we ensure that that process is simplified? If you want to file your tax returns, how can we find a one-stop shop for small businesses such that they don't have to be answerable to multiple state internal revenue services, for example, and also be answerable to the federal inland revenue services, and at the same time having several agencies to deal with because they just want to comply? How can we simplify that process? How can we incentivize them, not only from a tax perspective, but from access to capital, access to tools that will ensure that they're able to formalize their business? Because you will be surprised, sometimes just basic fear around accounting system, how much I need to pay to engage an accountant, or how much I need to pay to get an accounting solution is probably part of the reason that is keeping these businesses excluded. So how can we provide platform, all right, through NASME, through different MSME schemes, to ensure that while we're looking at it from tax perspective, we're also helping them to leverage infrastructure and solutions and opportunity that ensure that they're able to scale up. All right, and they're able to scale up. So the employment being provided is a lot more formalized. We're able to measure, we're able to track, and then we can bring this into the mainstream of the economy of the country.
Mr. Olugbenro, poignant. I'd like to just get back to some comments that our professional colleagues, analysts make concerning the informal sector. And they say that they describe that informal sector as the underground economy which holds the key to unlocking untapped tax revenue required to address the nation's revenue challenge. Do you share that perspective?
Absolutely, I share that perspective. But I would say is the derivative of the main benefit, all right, of getting of unlocking the real potential of informal sector. And what I mean is this tax itself is just a fraction of the economic profitability of a nation. So what we need to focus on is not just unlocking the informal sector as a way of generating tax revenue. We need to first of all use it to generate economic prosperity. Because like I did mention, quite a large percentage of businesses that are within the informal sector may be caught by the present tax exemption that is available to registered corporate businesses from a CIT perspective. Now, but what we can get more is a lot more employment, a lot more mainstream economic activities that can tie into the GDP of the nation. All right. And so as this then expand, as employment increases, we're dealing with insecurity, we are dealing with getting the economic continue to be active and hedge against a recession, hedge against all of those inactivities that happen. And then as a consequence of that, as this business, if we use the current rules, for example, as those businesses then migrate from being small player that are under the 25 million naira threshold, we can then get them into the mainstream where they can contribute their significant share that we all have been waiting for to raising the tax revenue of the country.
Poignant, Mr. Olugbenro. I knew you made an allusion to MSMEs before. We have a whooping 41.5 million of them in Nigeria. And because a lot of them conduct their businesses in cash, it's been very difficult to determine their turnover. Are there regulatory and physical issues precluding some of these SMEs from growing and moving into the formal sectors?
Well, of course, there are a lot of issues. Some selfish reasons, some very understandable prevailing economic context within a country. When I say selfish reasons, the number of businesses that deliberately try to play predominantly within the cash, using the cash base as means of transaction, because they know that this limits their visibility to the revenue authority. So that's one. Now, but when we talk of financial inclusion, we must also recognize that there are businesses that are also located in areas where banking, all right, banking coverage isn't as prevalent as we will have, say, in some of the elite states that we have. So some of those infrastructure challenges are part of the reasons. Now, I did mention the bureaucracy, all right, and some of the entry barriers in terms of business registration, the multiplicity of agencies that you need to deal with. So if you realize that just by wanting to formalize your business, there are just too many hurdles to cross, there are just too many mountains to climb for you. You just want to keep it simple and focus on how do I focus on growing my business first before I think about formalizing and registering. So with this kind of a background, what the government needs to do, or what government needs to continue to do, because again, I think a number of steps have been taken, and we must admit that every time. Now, what we need to do is to continue to lower, this entry barrier. So from a regulatory perspective, from a legal perspective, from a tax compliance process perspective, the tax compliance process is still saddled with a lot of inhibitions that will, make many willing, taxpayers to still find it a little bit too cumbersome. They deal with multiple agencies. They deal with multiple tax authorities. Many of the tax authorities are still largely manual, all right, in their operations, in their system. Many of the systems still require that you log in and log out of different multiple applications and payment portals, one for filing of your returns, the other one for making tax payment, the other one for processing your TCC, the other one to process your withholding tax credit note. There are just too many layers of compliance protocol that still make these small players feel overwhelmed. So we need to be overwhelmed. Absolutely. So we need to be deliberate about how we simplify the process and how we enhance the process using technology.
Simplicity, technology, and inclusion. But do you really think that the reforms of the payment systems that we are beginning to see can be leveraged to address this dearth of data for taxation in this informal sector?
Well, it will help, but I think we need to be a lot more daring in our approach, particularly the payment system reform. If you take, for example, the introduction of e-Naira, which is supposed to, part of the objective is supposed to also help with the area of financial inclusion. But at the core of, what you need to be able to use e-Naira, for example, it's your BVN and your NIN. Now, this may be, may be applauded from the perspective of what this tends to offer to us. But if you think very broadly, most of the individuals that will be, armed with their BVN and NIN are probably people that should ideally be in the formal financial sector. Now, why can't we use platform, for example, or criteria that are a lot more daring than that? How about phone numbers? Because if you have your BVN, for example, and if you have your NIN, chances are that you are in the mainstream, or you should be in the mainstream banking. All right. So if we're talking about financial inclusion, we must recognize that there is a large percentage of people that don't have access to the formal financial system, where BVN is like, what are you talking about? Where the NIN is like, what are you talking about? So how can we make the entry protocol, adaptable to what their prevailing economic and social stratification is all about? So for me, for as long as we still think about it as, we need your BVN, we need your NIN, you're probably still going to be, revolving around the same guys who are in the mainstream financial sector. And a lot of limits to the real financial inclusion goal that we're talking about.
Excellent. I quickly just, I think Olusi Sanusi is talking about infrastructure deficiency that has contributed to the informal sector. That deficiency is the reason for entry barriers in the database. How can government tap into this sector to upgrade them into the formal sector?
That's a big elephant in the room when it comes to deficiency in infrastructure. We've been talking about it for years, but I think it's become more clearer to us that the reason why we're where we are is also because of financing. Now, if you look at the budget of the country year after year, and the one for 2022, you will see the inherent deficit that has been planned. Why? Because we can't raise as much as we need to be able to defray the cost of governance, let alone focusing on infrastructure. And it just continued as a loop, as an endless cycle, a vicious cycle, right? So we need the revenue to be able to fund infrastructure, and without infrastructure and without making sure that the climate is conducive enough for small player, they're just going to continue to face a lot of challenges. And so at the end of the day, government needs to be very daring and be very bold to say, look, we need to crack down on the challenges and be a lot more long-term in our focus. Now, it can be a short-term measure because the problems are fundamental. The problems are germane, and until we see it that way, we won't be able to crack the nut to the extent that we can get the kind of mileage that we're looking for.
Thank you. Thank you very much, Mr. Olugbenro. And Sisi Oguze, naturally, in this course like this, we're talking about issues surrounding multiple taxations. She's saying, of course, that is getting out of hand. What can a common man and common woman do? I think she's a lady in this issue to reduce cheating from the other side. And the other side now is the omnibus government's presence.
Well, I think this issue of social deficit or or absence of maybe breakdown of social trust, it's also a major issue, right? So sometimes potential taxpayer look you straight in the eye and they ask you that, $1 billion question. What has government done with, the little that we have paid, or for tax revenue that has been collected? And that just puts the battle back squarely on the table of the government, that a lot still needs to be done in terms of transparency, in terms of accountability. We can do a lot more. We can do a lot more by instilling that trust and confidence in the system. And when you talk of multiplicity of taxes generally, again, some steps were made, but what we need to do is to roll it out a lot more. So if you think about the exclusion of MSMEs that I mentioned earlier, it was a company's income tax provision. Whereas many of these players that we're talking about, get taxed under the Personal Income Tax Act because maybe they are enterprises, small partnerships, sole traders, and those ones are liable to tax under the personal income taxes. How do we ensure that we roll it out in that particular manner? Now, when we do that, the other question that, the other angle that also still needs to be fixed is raising the threshold for personal income taxation, because you don't want me to be more disadvantaged because I'm in a formal employment, but earning so little, compared with someone who is, in business and earning so little. So in every jurisdiction, there's always a threshold. What we currently have is almost non-existent. Only those earning minimum wage, I think of about 30,000 naira or so, are excluded. We need to raise that threshold so that not only registered limited liability companies, but we can extend it to enterprises, sole traders, but we can also include those in paid employment, but whose income, are within a certain type of threshold. You always need to do that and create that aspiration in every Nigerian, in every businesses, to look forward to a point where their business will get to a size where they can contribute more to the economy of the nation.
So Mr. Olugbenro, I'd like us to just raise this discourse a bit higher. Okay, now, of course, we know we have the emergence of e-commerce, e-businesses, and what have you, that multinational corporations engage in cross-border transactions driven by technology, so that profits are generated in environments different from where those taxes are paid. How can government confront this base erosion and profit shifting mechanism?
I think government is already making an attempt. We just need to enforce. And I mean that by the recent introduction of significant economic presence in our tax code. First, it was in the Companies Income Tax Act, but now it's also been rolled out into the personal income taxes. So whether you are an individual or you are multinational, operating out of the country and making money from Nigeria, the law is already there to say if you earn more than 25 million naira, you are liable to taxes in Nigeria. So what we need to do is to be able to, institute monitoring mechanism and enforcement mechanism to ensure that these laws are complied with, and businesses that are operating out of the country earning money are able to pay taxes. And if you remember, there's also a similar global agreement that was rolled out recently by the OECD, the two-pillar solution, where they introduced a minimum corporate tax for multinational companies, and all of that. Well, given that Nigeria is still a bit hesitant in rolling on the bandwagon, all right, it's hesitant, and the reason is very simple. Now, this is a two-pillar solution, right? The first pillar, which is at the forefront, appear very attractive, which is every multinational company, wherever you operate, once you earn about 750 million euro in annual revenue, your minimum tax should be 15%. That's attractive. That's fantastic. Now, but it has a twin second pillar, which is what is making Nigeria to be a bit reluctant. That second pillar says there's going to be a rule for redistributing excess profit of certain multinational companies. And once that rule is applied, every country that is then a signatory to that needs to do away with its unilateral digital services tax. All right. Now, but when Nigeria looked at this rule, number one, only very few multinational companies will be covered, because we're talking about multinational companies with about 10 billion euro. All right. Now, if we look at those multinational companies and you look at the business operation in Nigeria, vis-a-vis the current rule by Nigeria, which brings every foreign digital player into tax in Nigeria once you earn more than 25 million naira, Nigeria seems to be weighing whether its own unilateral rule is better versus what the OECD and the G20 rule is saying. And I mean, the initial statistics is such that Nigeria will feel reluctant because some of these businesses, the threshold that makes Nigeria to be eligible to participate from that excess profit or additional taxes that is going to be made available, the bar is a little much higher. I mean, it's much higher than the 25 million. So in a way, as far as Nigeria is concerned, if you are playing in the e-commerce space, right, and you earn up to 25 million naira in Nigeria, then you are liable to pay taxes, whether as a corporate entity or as an individual that is trading. What the country needs to do a lot more in this area is how do we monitor, how do we ensure compliance, and how do we get our fair share, of taxes from these businesses.
Compliance, you can hear me. Monitor and compliance, and to do those are key words. Let's shift our gaze to the Finance Act 2020. Among the objectives were some of the things you already mentioned, to eliminate double taxation, ease tax payment, give incentives to entities, support government policies, which we already mentioned. But some hardcore analysts really opine that the act has not paid any positive impact on Nigeria's revenue profile. Do you share that sentiment?
Well, I think what I will answer it by trying to put their comment in context. We recognize that the economy of nations, including that of Nigeria, is still going through some severe challenges brought about by the prevailing COVID-19 crisis. So the economy is not back to where it used to be. We only just, narrowly escaped from recession. And you know that beyond just the escape from recession, because your statistics say you now have positive GDP growth, this needs to trickle down to Nigerians and to the common man on the street. It will appear as though this hasn't really, happened. Many businesses are still trying to, normalize the prevailing business environment. So it is true that if the prevailing COVID-19 crisis were not there, a lot more will have happened from the economic buoyancy, from business profitability, and therefore Nigeria will have been able to rake in a lot more in terms of tax revenue. But things are getting progressively easier. They are getting progressively better. The expectation is that the total collection in 2021, for example, should exceed what we did in 2020. I think the FRS generated a little below 5 trillion naira. The expectation is that it should be significantly better in 2021. So the benefit of many of these reforms that we've had over the last 2-3 years, it's not just going to be 1 year. It's a benefit that we're going to reap in over the next foreseeable future. We just need to continue to make this incremental progress and see how the number changes over the coming years.
And we hear the informal sector workforce willingly offering themselves for tax assessments and compliance in some other climes. But why do you think such civic culture is lacking in Nigeria and amongst Nigerians generally, mostly?
Well, I don't think I agree totally that in all other jurisdictions, taxes are paid willingly with laugh and with smile on their faces. Nobody do that. Well, there are 1 or 2 countries that maybe you can feel the excitement when taxpayers go to make payment, and they do that because there is a direct connection with what they also get from the system. They can see the benefit in free healthcare. They can see the benefit in infrastructure. They can see the benefit in social services that they enjoy. So they're a lot more encouraged. Maybe more encouraged to comply is a better word than saying they're excited. Now, many of the countries that we think they willingly comply, they do so because the law are strict and the penalties for non-compliance is severe. Depending on what your status in the society is, whether you are Mr. President or you are the chief executive of a multinational company, or because you are politically exposed, or you are a business mogul within the country, you know that if you are caught on the wrong side of the law will be applied the way it is. So it is a fear of what befalls me if I am non-compliant that makes them to rush to comply. So what Nigeria needs to do from those two analyses is two things. So number one is to make sure that citizens can feel the benefit of their tax payment. So every contribution to the national purse, help to generate some form of social services and social benefit that everyone can see. So you are a lot more encouraged. So that is one. Then the other is to ensure that we enforce without discrimination, without partiality. You don't have to be treated as a sacred cow because you are politically exposed, or because you are a big business tycoon, and then the small employee in an organization that doesn't have the clout, is being clamped down on. So fairness and equity, and knowing that the law will be applied, irrespective of whose source is God, that will ensure that everyone is afraid of the taxman. If I can use that word, so you are afraid of the taxman because if you are caught up with, the penalties will be severe. We don't seem to have that culture entrenched within our system yet.
Thank you very much for that insight, Mr. Olugbenro. Justice, equity, fairness, with some measure of compassion, whereby we look at the weaker of the weak. We are now going to be going on a short break. And when we come back, we'll still continue to engage my dear Mr. Yomi Olugbenro for some more insights into those things that bug me, and bug the economy in terms of getting the revenue, expanding the tax base, and getting revenue in trusts for the use of all. Please stay put. We shall soon be back. You are welcome back. Before we went on break, my dear guests, Mr. Yomi Olugbenro was talking about accountability, fairness, equity, and ensuring that we are all encouraged by way of trust to see what government does with the tax that they hold. After all, in taxation, there is no quid pro quo. We see situations where people say there is no direct relationship between taxes you pay and the benefits you really enjoy. And he has actually elucidated that government needs to demonstrate proper deployment and utilization of these taxes, so that people will see and then they will have more encouragement to want to pay. And those citizens who decline wanting to pay taxes because they are not seeing the benefits of such tax payments will be encouraged more to make sure that we hold our leaders to account. In this next segment, we'll ask some more questions. Now, Mr. Lugbenro, some analysts have attributed the refusal of players in the informal sector to pay their tax because of their inability to distinguish between their capital costs and sales of profit. Now, do you support the proposition that government should hire and deploy professional accountants to support these entities to keep proper records, which will become the basis for the fair and equitable tax?
I will agree absolutely with that proposition because some of the challenges that many of the players within the informal sectors, some of the challenges they are having is, to some of us who are accountants, we think this is a bread and butter thing. We think it comes natural for you to have proper book of account, for you to have your accounting records, for you to be able to separate between cash flow and profitability, capital and third parties earning. Now, it's not that simple. Because many of these businesses, some of them, they don't have basic accounting knowledge. And so if government could support those businesses by providing platform, and service providers at the expense of the government or at the expense of different agencies of government to be able to help these, small players and players within the informal sector to have adequate and proper accounting record, it will go quite a long way. We will be dealing with a fundamental challenge that these businesses are facing. They want to scale up, but they think the costs are prohibitive. They want to scale up, they want to have formal accounting record, but they don't want to engage professionals at their own expense because they think the business is too small to be able to afford that. So if this is part of the facility and the incentive that government is able to provide to them, it will go quite a long way.
And we just espoused that now, and I remember, the late Professor Escotoyo at his motto Pack Economics, always talking about the jigbin that goes around the bottom back to collect tax. And that takes me to asking this very pertinent question. Can the government eliminate stout from tax collection in Nigeria?
Government should. Because again, when we talk about the informal sector not paying taxes, sometimes what we mean is that they don't pay taxes to government official covers. There's actually a lot of leakages within the system. These businesses pay to non-state actors. There are a lot of trade associations, there are a lot of touts to whom these businesses pay taxes. For once, you will think transporters, people in different kind of mini trade across our markets, you think they are not known to government and they are not paying taxes, but some of them cannot operate daily without parting away with substantial amounts of their revenue to touts at the car parks, different trade associations. So it's possible for the government to ensure that this payment that is going to unofficial covers and non-state actors are actually channeled appropriately. And part of the ways to do that is to ensure that there's a lot of linkages and a lot of collaboration with particularly some of the former trade associations that we have across the country, to ensure that not just that these businesses are paying taxes, but those taxes being paid or those levies and charges being paid get into the official cover. So it is pertinent and it is critical for the government to ensure that those revenue that those businesses are paying get to the official cover and eliminate as much as possible the non-state actors or use them as a vehicle for getting access to many of those businesses.
I think a question flashed earlier from Mr. Kolawole, if I don't get it wrong, and he was talking about the fact that his office is in Lekki. And then he was now made to go. Okay, his client's office was registered in Lekki, and they made strenuous efforts to register for tax, only to see that the tax station was now really, and of course, according to him, the client backed out from registering because This is what he wanted to do freely without being forced. This complexity and the inconvenience and the bureaucracy. Mr. Olugbenro, what do you think?
No, I agree, and I alluded to that earlier on in terms of making sure that the process is simple. So maybe this challenge, for example, could have emanated from where the business was originally incorporated. So maybe this particular client of his that I was talking about registered a business on the island, or maybe stated an office close to Relay, and in the process of CAC doing the automatic generation of tax ID, they have assigned that business to the tax station that is closest to where the registered address is. Now, this will happen all of the time. So the mechanism should be so easy and should be so seamless that should you then formalize your business registration and you want to proceed with your tax filing and tax compliance obligation, all you need to do is a very simple process, and go into the portal and making sure that you can choose the tax station that is applicable to you. So maybe the first one is just the one that was allocated by default. So, but you should have the ease and the convenience at your own disposal to be able to say, look, no, the business is no longer in Relay, the business is now in Lekki, and therefore I want a tax station that is close to me. If you walk in physically to the tax office, they definitely will assist with this particular process. But what we are saying is that it doesn't even have to require physical walking in. The mechanism should be so seamless and easy that once you are ready to, file your tax return, you don't have to, go and queue up somewhere for your taxation to be, for you to be reassigned. So a whole lot of rethinking of the process is required. I think sometimes the process is not holistic enough and it's not thorough. It needs to be a holistic process where the compliance process is simplified. The paying tax experience, the tax experience is so simplified. It's easy for you to know where your taxation is. It's quite clear and easy for you to know what the rules should be, particularly for small player, and it's quite easy for you to file your returns. It's quite easy for you to pay your taxes. And it shouldn't be just pocket of different databases and online platform that you're supposed to be registering on. On a single window, you should be able to do an end-to-end process from registration to getting your TCC done when you are done with your filing.
And then, of course, the Nigerian big question. The economy is harsh. Ease of doing business is hard. The informal sector is crowded out. No inclusion. And some people are now just wondering that should the government not provide subsidies that will help this informal sector to become more productive and responsible by doing a little bit more than what they have done in terms of waivers and tax liabilities to these informal people?
Well, government definitely can do more, but what I think is we need to be a lot more creative with the incentive we give to business. Government have very limited fiscal headroom to be able to provide direct cash incentive to a lot of businesses. So in addition to what has been done, say, for example, from a tax exemption perspective, one of the needs of businesses is the one we have discussed. How can we provide mechanism for businesses to be able to formalize their accounting system and be able to do their reporting? That is an incentive. It doesn't necessarily have to be, cash being handed out to business. Now, some other incentive that could be provided is in form of access to capital. All right. So we know what rate bank finances and bank loans will be for anyone that needs it to be able to grow his business. Now, all the government needs to do as far as this area is concerned is just policy. So how can we develop policy that are specifically targeted, that are very inclusive, wide covering, and make sure that small players can access finances from commercial financial institutions at rates that are not prohibitive. Now, these are incentives. It's a matter of policy, and it doesn't necessarily have to come by way of direct cash to the player. So those are areas that we can creatively think of supporting businesses so that they can grow out of small size businesses to a big player.
Great point, Mr. Olugbenro. Time always is a challenge here. I'd like to just give you 1 minute can we have your last word?
Well, thank you so much. I think my last word will be that we need to be comprehensive in our solution towards supporting small businesses and towards ensuring that the informal sector, is brought into the mainstream. It will require a complete rethink of the process. What we are doing appear to be retail piecemeal. There's a tax exemption. PEBEC is helping on the one side, but a whole lot more still need to be done. From how do we ensure access to capital? How do we ensure that our sensitization and publicity and awareness is enhanced? So a whole lot of policy needs to be mapped out by way of a formal blueprint, so that we know exactly what government is doing. Everything is well articulated, and the information is accessible to player within this sector. It's only at this point that the real benefit that we derive can be harnessed from this sector.
Only left for me to thank you very much, Mr. Olugbe-Nro, for the insight that you have given, and be sure we are going to ask you to come back and throw more and more insights. I also want to thank our online participants. Thank you for the feedback that you've given and some of the very good questions that you have raised. I'd like to also inform you that our next episode is going to be on November 4, 2021. And the time will be 6 p.m. West African time. And the topic we are going to be looking at will be Nigeria's post-COVID economic recovery, the place of the private sector. Our guests will be Dr. Munda Yusuf, the immediate past Director General of the Lagos Chamber of Commerce and Industry. You don't want to miss that for any reason. Now, let me leave you with this quote. Africa's informal economy is one of the most innovative and inventive environments in the world. One of the most innovative and inventive in the world. That is attributed to Richard D. Attias. And I always say, be the change that you like to see. I remain yours, Akin Fatunke, your host on ICAN on AIR. Bye for now.
My distinguished member, it's no longer news that our nation is going through a tough time. The economy, insecurity, infrastructure decay, unemployment, name it. Trust is lost between the government and the governed, between enterprises and clients. As professionals, we can no longer fold our arms while things go wrong. We need to stand and be counted by offering the government our expertise to find a lasting solution to this myriad of problems. To this end, the Institute is dedicating its 51st Annual Accountants Conference as a platform for technocrats to x-ray the nation and profile workable solutions to these challenges. The theme of the conference, which holds from November 29 to December 3rd, is Trust in Governance. How can government earn our trust? Why not join our lead speaker, Mr. Akinwumi Adesina of the African Development Bank, and other renowned speakers at the conference as we lay it all bare. I look forward to personally welcoming you at the conference. See you there, because it promises to be intellectually stimulating and experiential. Thank you.
There must be a wealth shift by unlocking the potential of the youth. We must not see the youth as risk. We must see the youth as assets.